Good afternoon. Welcome to OptionsTender. It's Friday. Happy Friday, everyone, and welcome traders. May 23rd, 2025. We're going to continue to do the daily. We're getting a weekly reversal, outside reversal on the weekly time frame. Later on that, in the weekend video, we'll do the weekend video either tomorrow or Sunday, time permitting. And yeah, it's looking good for the reversal. We see this bearish rising wedge pattern breaking down, and then we're going to move this line here, show you what's happening. And this could simply be a back test if we get a bounce here. If not, then we continue down to lower time frames. Why would we get a bounce here? Here we go. Let's go through these indicators and moving averages, and I'll show you exactly why. And if you're new here, go down to that bottom right hand corner, hit that OptionsTender logo, and subscribe. And don't forget to like the video. At the so we're doing this intraday about 12:30 p.m. Eastern Standard Time. If you want to get these videos intraday and the Discord and the trade alerts, we did one with Tesla today. Consider becoming a 99-cent YouTube supporter on YouTube. Okay, and then if you are interested in getting the full individual stock analysis, we go over each and every trade with a video. We did one on Tesla to show you, walk you through what we did, what type of vertical spread we did, and you know where we're wrong and what we're looking for. All right, in detail. Very good. Let's jump into the video then. So you see that we're getting, you'll probably have a green one on your screen, but the day is still red. So a hollow red candle, that's sometimes a reversal candle. So we'll be looking out for that. You see this green mark here. I think price is probably going to make it to that point. You have a good support there, but it doesn't have to. And if I add on the moving averages, you can see why price could hold here, and that could be it. And you know, bulls are going to say all-time high. All right, so I think, and you know, if we start to get this bounce, I think it's a dead cat bounce. Well, it's likely, with it being a wave 2, in my opinion, to get into this range here, and you have resistance around 5,900. All right, I know that's 100 points away, but that's, you know, we're just now starting market structure, so we have nothing on the daily time frame that says that this is a you know, now a downtrend. So if we get this bounce in a lower high and then we break the lows here where the 200, 120 moving averages are, then we go down to the next level. And then if we do have that bounce, we have market structure now. Okay, so the bulls will argue we have an A, B, C, or it's just done here, which I don't think so. We're going to go down to the 65, so make sure you stick around, and we'll show you what this 5-wave move looks like, and that we had wave 4 yesterday into the 8 moving average. But now we could have a deep retracement. It doesn't have to, but wave 2s are pretty deep. Look at this wave 2. If this is a wave 2, made it almost to the 887. And it made it to this really deep retracement back to this consolidation area. So a good spot to bounce. We told you guys yesterday that we'll be looking for this, and we came straight down to it, and that's fine. Now we're going to get a 5, likely a 3-wave move up, and then a failure down to this next point there. And that would be healthy still for bulls. And you want to hold this 50-day moving average on this traditional look. And all that would say to us, if all of a sudden we made new highs and continued maybe even to a new high, is that this was a 1-2 setup, and you're into wave 3, and you're looking for wave 4 and wave 5 up here. And that's going to be bullish. That is either the wave 5 end of the entire bull market. If this bullish scenario pans out, I'm not looking for that. But price, I can't tell price what to do. All right. So after that, that'd be a great shorting opportunity. And likely the end of the bull market, unless if you get up here Now you're looking for an extension. Now you're looking for a nice deep pullback and to continue with wave 3 up into the up to the moon. Okay, you're looking for prices well above 7,000, possibly even 8,000 at that point. No, there's no way I am near that bullish. No incredible way. And in last weekend's analysis, pay attention to that, because if you go to the weekend analysis, I show exactly why I'm bearish, even if price makes it up to here. But I think this was a wave 2, and then we can continue lower. All right, sorry to ramble on to there. We'll move quickly. This line, now I want to reflect there. All right, so no, I should have did that yesterday, right? So that was our benefit of the doubt line. All right, so we had a touch there, and maybe we go back to back test it. But at this point, you really don't have anything holding there. Is that a valid trend line? Nah, meh, it can be. So you can leave your wedge just like that if you want to, where you have all 3 touches there. But we gap down from it. And so I'll leave it there for you. But if price trades through up there just a little bit into that resistance, I'm not worried about this trend line. That would just be the smaller trend line backing up. And I have both of those on the lower time frames. Okay, McClellan oscillator. Very weak. We're down past into the over sold territory. Now I suspect this is going to get, little bounces here or just stay weaker. We'll have to pay attention to tech when you know the overall market is very weak. Then if you start getting tech, bouncing or even making slight new highs, then you know that it's a very weak market. And as soon as these give up on their bearish sequences, then those will lead the market lower. All right, so we have a technical breakdown. No histogram crossover. We're looking for that bearish crossover. When that happens, possibly again after this little micro bounce, then this will start to get some momentum. You'll have sellers stepping in, and you'll have the bots, the algorithms jumping in as well. So we're getting weaker in the RSI, but not oversold. And the slow stoke, also a headwind for the bears. D-Mark. All right, we're expanding that count to the downside. We're in a 3 count. I suspect we'll get that 9. And then we'll just continue to monitor this. Nothing to really see here yet. That's our 3rd red bar and an awesome oscillator. Let's go to SPY. All right, the money flow index, money's flowing out. Nothing really to monitor this. Bollinger Band, we already had our sell signal. We're getting to the mid band there, so maybe that's why we're getting our little bounce. That's the 20 moving average, and I suspect we'll hit the bottom of this band sooner than later. All right, let's okay, nothing to update on the volume shelf. Well, as we go down, let's check out the volume shelves. So here's our next node. Closing the gap, we have a node there and a node around 560. So 560, underneath that 544. As price gets a little lower, see, we don't even have much volume until 568 and 565. Okay, that's no coincidence. 565 is right where our gap closes. So after a little shuffle in here, we should close that gap. There's not a whole lot of volume in between. All right. So we have our wave 2 possibly in. We're looking for this gap close, and no coincidence. Again, it's 565 all the way down to 561 is our fib cluster. I think that's going to come out there. Now, the 786 can act as resistance again if we're getting this this bounce here. All right, so we're into the gap area. We're getting a reaction, and maybe that's 1 or 2 days into turnaround Tuesday, and we continue to go lower. Okay, so give yourself a little time on your puts if you decide to get some on this bounce, which if we make it all the way back to the 585, I'm going to add some more. I'm going to add some more puts. Now, anything else to see here? Timing? No, not till the end of the month. We're good. So let's go ahead and go to the VIX. So with the VIX, you see this basing here, this wonderful multi-year base, looks beautiful. You hit it lower this time. I call this the extreme complacency zone around 12. We made it down there. Price couldn't get back below it. So it's holding a good base and now starting to make higher lows here. All right, I think that's a beautiful spot. And although spiked up here, maybe the VIX comes back down to test the 19 area. It's been so important. 19 is going to be a very important area. So let's see what the VIX tells us. It looks like it's in a falling phase here. So maybe the VIX starts to get a little bit more wicked into the beginning of June, making a higher low, and then really start ramping in the beginning of June. All right, and that fits our scenario that we gave on our cycles and such on the SPX for the individual stock members. Now, TNX, we talked about that yesterday. I'm not going to go into detail again. I have a video for members. If you didn't watch that, it's named The Real Reason the Market Will Crash. Okay. And I give that reason. And so that we're just monitoring a reversal here. We're looking for bonds to start to reverse and accelerate. And we're getting a clear bounce because this was once resistance, a 62% retracement. And we're looking for this sell tech. As the rates fall, tech is going to become weaker and weaker. And the small caps have been relatively weaker on the way up. Okay, because they work off of a lot of debt. All right, tech prints money. So with the rates falling, you have recession, and those that should reflect against tech. It should be relatively weaker as price goes down. So we should break underneath 44.50 probably next week. And let's go to the 65 on SPY. Okay, I had to pause it for a second. Computer was taking some time. Thinkorswim was taking some time. So this was adjusted. Here's the wick. All right, so this is kind of a zone here. We had you can use the body down at that higher low and to hold right here. So we checked that out and then the price gapped. We had it right here, but either way, no matter where you put your trend line, that's just a geometric line here. So again, this is the real wedge that was forming up there. This, sure, it could hold that bounce there, so I'm going to leave it. But this is exactly where the wick holds up. And so if we break down from here, it just means that this is more of a wave, still of that wave one continuing down here. All right, and so it's going straight down to close the gap. So I don't know what's going to happen here. Maybe we close the gap, it gets back above this geometric line. I don't like it. This is much more important here. So we'll see. If we close the gap and get back to this options expected move by the end of the day of 585, that's a good spot for me to add on to our puts. It might even make up to 590. I think that's more likely, this resistance where price broke down right here. So this zone, we'll call it 585 to 590. That's where we start adding more near term puts because we already have our swing trades established and we're looking good on our core positions right now. Okay, moving averages. We're holding up on that 100 moving average so far. If that breaks down, we only have the 200 underneath the 8 and the 20. MACD is into bearish territory. It played out this bearish divergence. Now we made a new low on RSI. This can continue to go lower and even have bullish divergence, okay? So as price goes lower, maybe we just stretch out this wave 1 and then we get a nice size wave 2 and then continue wave 3 lower. That's a possibility. So no positive divergence or anything yet. So I would just kind of hold still on things and just sell the bounce. D-Mark. Nothing to look at here. 5 count so far. No setup. Awesome oscillator. Our setup played out. You had the negative divergence. We're in bearish territory. Money flow index. Again, overbought, and then we made new highs, bearish divergence that's playing out. Let's see if on the 65, maybe this is just a little bear flag and this continues to close the gap going into Monday, and then we have that turnaround Tuesday for the bounce, okay? That could be the scenario. And I would like to see this in the oversold territory. That would tell me that this is a nice 5-wave move down here, and we need a back test, a significant back test to go 50-60% of retracement, and that would and hopefully that gave us an oversold position. But right now we're holding still, and that would be a nice time to take just a pinch of profit, or just wait for the bounce to hammer it back down. And then even at that point, you could protect your positions, a light protection, and then turn around and use that bounce protection to hit some, to add on some more puts there. All right, so whatever your trade plan is, I like that one. If I know that this is going to stretch out and then the money flow index really shows us an oversold because we came straight down to the zone, I like to add those protective puts in the near term and let those appreciate, and then I can use that for a bigger position to the downside while leaving all of our swings still. So at this point, I know it keeps hitting, right? We had the buy signal here. If you're in the extreme short term, you had your buy signal here with the oversold RSI. Again, we're getting the same thing. And guess what? We're getting that little bounce. Is that it? Or do we continue to push this down to the green zone and close the gap here? Volume shelf, Elliott oscillator played out. It was showing that we had a top possibly in, and now we're into bear territory. And again, here's our situations. I'll show you the two situations. Yesterday, we talked about this being a possible. So the top is in, and we're breaking down from the wedge. Now we're looking for this wave 1 to complete. I wasn't sure if we're going to get a bounce here for wave 2, so I wasn't playing. Just leave your hands, sit on your hands. And so this is starting to stretch out. So to me, it looks like a 1, 2. And however wave 3 is playing out, might be done, 4. And we might even get an extension on wave 5. So wave 1's the shortest. Wave 3 is a little longer. And this would be a larger wave 5 showing acceleration of the move. And then we should get a wave 2 for that. And then I don't know, if we're going to be able to see another wave 1 and 2 in there. It might be a much smaller one later. But let's look for this first initial wave. Let the market give us information. And then we should reject off of certain large levels after. So far, it looks like a bear flag. So I think we might go just a little bit lower. Possibly, a lot of people will say this closes the gap. But this is actually the close of here is down here. So possibly maybe it ends right there at 570. But by that time, it might as well go all the way down to 565. Close the gap. Then we get our wave 2. But remember, this is our bull bear line. Oh, let me go ahead and change. Here's our bull bear line. Here is the bullish count. There is our bull bear line where the 382 ends. A wave 4, so it would be more clean for the bulls, if we started to get a bounce, a larger bounce, and then a third maybe crashy like wave, all right, for wave 4 into the 382, and then you start going higher. All right, we start breaking down from this point, get a reaction, a small bounce, and then start to fall to the next zone down here at 335. Now we're talking this being invalidated. Okay, so our bull bear line here is about 562. About 562. All right, so we'll pay attention to that in the next coming up videos. There's not much else I want to cover. I'm going to end this now, and you see what's happening on the daily. Let's go into more detail on the higher time frames and get a game plan going out this weekend for the individual members. We'll show that game plan, and you know, you guys will clearly end up getting the plan anyway to the public. And by the way, these videos come out at 4 p.m. If you're not a member, no big deal. You just wait till 4 p.m. and they'll pop up. So hit that notification bell. Don't forget to like and subscribe, and we'll see you in the next video.